Good morning, happy Friday, and happy Juneteenth. Jordan Keck here, your complicated deal guy with your weekly market update. Kicking off interest rates, moving down just slightly from last week. We were at 6.60, now at 6.58. And so not a huge change, but anything going lower is in the right direction. As far as our weekly mortgage tip, wanting to talk about using assets as income. Now, there's a few different ways that this can be done. I'd say the easiest one of these, which also qualifies you for the least, is Freddie Mac and Fannie Mae both have an asset depletion format, which says if you have a total amount of liquid assets, let's say that's in a stock or market account of some kind, you can use Freddie Mac says 240 months divided, so the total amount of assets divided by 240 months, and you can use that as a monthly qualifying income. So for example, if you had 240,000, that can count as an additional $1,000 per month as income. Fannie Mae is a little bit more strict. They divide it over the full 30 years, so divided by 360. That's the most, I guess, conservative way of doing it. If, however, a situation comes up where a client has money in a trust account or they've got money in a retirement account, specifically an IRA or 401k, some kind of retirement fund account there, we can use 3 years rather than 20 or 30 years to be able to determine the remaining useful life. So really nice if somebody does have some additional assets they want to use. Maybe they're not taking as much income or they just don't have as much to qualify. Great way to either supplement or be able to fully qualify based on those assets for income. Next up this week, you probably already heard, but the Federal Reserve met, did not cut interest rates here this week. This was the first meeting where we had Warsh as the new Fed chair. The market did react negatively to the dot plot chart, which is an indication of where the Fed thinks rates will go. And as a whole, we're more inclined to hike rates than to drop them compared to previous meetings. There's also an upgrade in inflation expectations in the summary of economic projections, both of which the markets did not like. Next, we did say good news for the market, though. The US and Iran have officially signed a Memorandum of Understanding, which will immediately open the Strait of Hormuz. This also extends the ceasefire for another 60 days, during which time they'll iron out the details for the longer-term plan. And while it's not officially a statement of peace yet, it's definitely moved a major milestone in the right direction here, not just the rumors that we've been seeing. Next, pending home sales for May rose 3.8%, significantly above expectations of just 0.8% here. And now pending home sales have increased for 4 months in a row, showing continued resiliency in the market. Next, Cotality's rental report for April showed prices up 1.4% for the year, much cooler than the numbers we've been seeing in the past, even though it is an increase from the previous report of 1.3% year over year. This time last year, we were seeing rental prices up 2.8%, and so down to 1.4 now, about half of where we were last year. While this should be helping inflation numbers by not seeing as much of an impact, because rental prices and housing prices in general do count into inflation, we've seen in the past that the rental and actual home prices, the home costs, are very lagging in the actual inflation reports. So this may help in the future, but not quite seeing it take into account yet. And lastly here, as a result of the signed memorandum, the opening the Strait of Hormuz, we have seen oil prices drop to about $74 per barrel, the lowest that we've seen since March, after hitting highs of over $100 a barrel. And so with that, the biggest relief is on inflation, which is fueled primarily by higher gas prices we've been seeing the last couple of months, and the biggest enemy to lower rates right now. With some luck, between oil prices coming down and with a new Fed chair who's been a little bit more dovish than Fed Chair Powell previously, we might actually see rates coming back down sometime this year. Who knows? I mean, the last few years we've always been hoping for rates to come down, but we're seeing a few things move in the right direction. As always, hopefully this is helpful. Have a great weekend. We'll see you next time. Take care.